Hello guys and welcome to Trading and Investing with Carl. In today's video we are going to talk about if JD.com and Tencent are worth investing or not. First of all, I have to say I'm in both of the companies invested with a quite big position, so I could be biased with the things I say. But I still try to give you the most objective perspective I can. First of all, we are going to talk about Tencent. And as always, we are going to start with the pros. Tencent is one of my all-time favorite companies. It has a broad spectrum of investments. It has over 200 investments. One of those is Wechat. Wechat is the most important social media and marketplace in China. It's not only there to ride with your family and friends, you also can do business there. Even though America wants to put sanctions on Wechat, it wouldn't affect them because it is independent from external influences, because it's not used as a marketplace outside of China. And only 2% of the Chinese population is based in the US, and they only use Wechat to ride with the family and friends. Also, Tencent is invested 20% in JD.com. Tencent has an international business. It is invested in a lot of different companies around the world. It is, for example, invested in Riot Games, known for League of Legends, or in Epic Games, that is known for Fortnite. They bought in 2012 48% of Epic Games for 330 million US dollars, and you can calculate now how much the shares are worth now. But we're also going to take a look at what else they have in their portfolio. So you can see here they have over 250 investments around the world. They have different apps. They also have different acquisitions from iFlix to, as said, Riot Games and all kind of stuff. So it's kind of like a big investment fund. Also, you can see here in the product list they announce at their website, you can see they have Weixin and Wechat. They have also fintechs like Weixin Pay. They have QQ Wallet. They have here, like said before, League of Legends in-house by Riot Games. They have, for example, parts of FIFA, Call of Duty, Need for Speed. Also, as said, Fortnite. They have a lot of different things. If you want, you can look through. They have an extremely broad spectrum of different things. That is something I definitely like about Tencent, and that is one of the biggest reasons why I have such a big part of my money in Tencent. Another thing I like about Tencent is their numbers look fantastic. They look really great. Now we're going to take a look at a few of them. So here you can see the equity ratio. It's always between 40 and 50%, and that is something that I like. Another thing I like about the numbers in Tencent is the earnings per share after tax. You can see here they get better and better every year, and that is something you look out for if you look for long-term investment. You see a slow but steady growth. Also, another thing I like about the numbers is the dividend per share. You can see here it is growing and growing and growing and growing. I definitely like that. Also, you can see here the growth in percentage of the dividends per share was for the last years always in double digits. Also, the number of employees in the company is growing. That is also usually a good sign for the company. So after we have talked about the pros, we have to talk about the contrast. One of the biggest contra is it is based in China. So it means everything depends on the will of the CCP. Another problem with China is it is, for me, the wild west of regulatory. So everything can end if the CCP says they are not supporting the company anymore. Another thing is the company could get affected by sanctions of different countries because it has an international business model. Even though there are some contrasts, I still love the company because it is, like I said, a big investment fund. It has different kind of companies in the portfolio, in the fintech, in the gaming, and the gaming is booming and is going to boom in the future, in my perspective. So it has a broad spectrum of things where I see a bright future. So for me, it is a good investment. And please keep that in mind, this is no financial advice, it is just for educational purpose, and it only reflects my opinion, and please always do your own research on those things. Next on, we are going to look at Tencent on the chart. So here we can see the logarithmic chart of Tencent. We were in 2009 till around 2013, we were in this uptrending channel where we bounced back and forth. We also broke out of it, we got a retest. Even though I'm not looking for technicals in long-term investment, I still think it is funny to see that the technicals worked here. After that, we've built a new bullish uptrending channel where we also bounce back and forth and are still in this channel. You can see here also it is quite expensive, but in my opinion we are not going to see a big drop in the future. If we would see a big drop, that is for me definitely a buying opportunity to put more money into that company because I like the company. Next on, we are going to talk about JD.com. That's also one of my all-time favorite companies. As always, we are going to start with the pros. JD.com has a fantastic future in China. It has the same philosophy as Amazon, customers first. It has a rapid growing infrastructure that is even bigger than Amazon. Later on, I'm going to show you how fast it grows and how big it is. It is even bigger than the infrastructure that Amazon is building at the moment. It also has a rapid growth rate, and it also was one of the only logistics systems that didn't collapse in the COVID shutdown. JD also has a broad spectrum of sectors where they are positioned. It has, for example, JD e-commerce, JD healthcare, JD food, JD finance, and so on and so on and so on. So it has a broad spectrum of things they provide. Another thing I really like about JD.com, and that is the only thing that Tencent doesn't have, that is that it's completely independent from external influences, because their main business and their business is actually completely based in China. So even though other countries put sanctions on JD.com, it still is going to make its money in China because the most money they earn is earned in China. This is the financial and operational highlights from JD.com. You can download it on their website. So let's take a look. So you can see here from 2016 till 2019, they had 31% growth and are the biggest retailer in China. You also can see here Amazon in that same time period, 2016 to 2019, only had 29%. So here you can see a part of their infrastructure. You can see they have fulfillment centers in 7 cities, front distribution centers in 31 cities, and they have 800 warehouses across the country, and they're almost in all counties and districts in China. All in all, they have 20 million square meters. Just think about it, how much that is. But the one thing I wanted to show you is the comparison to last year. So here you can see the report from last year, 2019 in August. Here again you can see from 2015 to 2018 they had a 37% growth, and Amazon again only 30% growth in US and JD.com in China. But the thing I wanted to show you is this. It only took 1 year to build 5 million square meters and 200 warehouses. I mean, just compare it, what they've built in 1 year. Here you can see the 820 million and in 7 cities and 31 cities, and just look at it. This was only 1 year. That is an extremely growth rate. It was very expensive in the beginning, but it paid off very well. So that is a thing I really like about the company, is their infrastructure. It was expensive, but it paid off that well, and that is something that will last for a long time. So after we talked about the pros, we also, as always, have to talk about the contras. In my opinion, there is only one thing that I don't like, as I said before with Tencent, that is that they are based in China. Everything, as said, depends on the CCP. So that is the one thing that is, in my opinion, the most risky thing. The companies are healthy, they look good, their infrastructure looks good, their business model looks good, their future looks good. All in all, those companies are solid, good, and great companies where I love to have invested my money. Now we are also going to take a look at the chart of JD. As I said, with Tencent, the technicals only play a marginal role in my investment strategy. It only shows me if it is a cheap or an expensive entry, and with both of those companies it is a quite expensive entry, because you can see here the rapid growth we've had. So it is, to be honest, quite expensive. But every significant correction I'm going to use as a buy opportunity. I would love to see if we get back into this area, but to be honest, I think we won't see that anymore. So I'm lucky I'm already invested in this company at a quite low price. But if you look here for corrections or and cheap entry, I think those two are the wrong companies, because in my opinion they are going to grow even further. So now it's time for the conclusion. I think you've heard it. I love those two companies, and every kind of correction I'm going to use as a buy opportunity. It depends on how hard the correction. If it is a severe correction, I'm going to scale in even more, and if it is only a low correction, I think about it if it's worth to buy it now or maybe wait till we see a better opportunity to buy. But all in all, those companies have a lot of benefits and they have a bright future. But please keep in mind, this was no financial advice. Please always do your research, and also keep in mind I could be biased because I have money in those companies. And with that all said, thanks for watching, guys. Please smash up the like button if you liked it. Maybe subscribe to the channel. And good luck with your trading, good luck with your investing. And as always, guys, please don't get wrecked.